After the market topped out at 4,600 for the SPX, we have had quite the drawdown back into our channel. Is this going to continue, or will earnings propel us back to the upside? Riz and I will discuss it. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our Elite webinar. Now, if you are watching on YouTube, I would really appreciate it if you get down there and you smash that like and subscribe button. Click the bell notification icon right next to it to get notified every time we upload new content here on the channel. But we are going to take a look here at the S&P 500 like we usually do for our Elite webinar, and we have had quite the drawdown. Now, of course, the market was rather extended here, back on the 27th of July, but ever since then, we have not been able to breach 4,600 at all, and we had quite the rollover here this week and pushed right back down, right close to this 50 moving average, and had a bit of a bounce back up. We've got Riz with us tonight again. It's great having him on the show. Riz, what is going on here with the market? Is this just a normal sell-off, or is there other things going on?
Yeah, this is to be expected. Obviously, we could see from a pure technical standpoint, market was quite overextended, even on the RSI near the end of July. So not unexpected at all from the technical side. Obviously, from the macro side, we did have inflation numbers come in on Thursday morning. Quite a bit of volatility, intraday volatility on the Thursday, as you can see with that big candle with the tail or wick, you want to call it, at the top side, eventually closing down red. But the Friday ended up, I would say, a little bit of a bullish, a little bit of a dip buying scenario as we got to the 44, kind of like 50 area. That too coinciding with the 50-day moving average. So this is a little bit of a healthy pullback. Majority of earnings, like in terms of the big, companies, the large caps, the heavyweights, the Apple, Amazon's, Meta, Facebook stuff is pretty much done. I would say earnings are actually not too bad this time around. A lot of companies pretty much met or exceeded their expectations and estimates. The reason being predominantly because a lot of them were actually revised lower in previous quarters. So Amazon is one of the biggest ones where a lot of their numbers were revised lower when they reported last week. And what happened was they ended up beating those estimates because they were already lowered. So they had a massive run. Obviously, it faded a little bit in this week, but it had a massive 10% or so gap up post earnings, and it's one of those things where it kind of makes you think like, okay, well, you beat earnings, sure, but you beat earnings after you already dropped, the potential estimates and said, you're not going to do as good. So it's kind of like sandbagging, and then when you do good, it's like it just makes you look better. And that's a catch-22, because if we look at overall Amazon's revenue numbers, overall growth, it's actually slowed. It's not a bad company per se. Obviously, it's a solid, great company, but I think at this point it's quite overvalued, even now, even after last week's little bit of a drop. So we're in a bit of a weird market where a lot of the stocks are kind of frothy in terms of valuations, whether you look at the price to earnings, whether, whatever way you want to look at it to kind of get a valuation on a company. Many of them are a little bit frothy. I'm not going to go out and say that they're at like 2021, 2020 valuation numbers, but they're still kind of long in the tooth for the current, I would say, macro environment that we have currently, with higher than historical, related rates. And you can see that by approximately, like probably mortgage rates, for example, are obviously at around 23-year highs, but even benchmark rates, we haven't had benchmark rates at these levels since I think pre 2008, 2007. So it's uh it's kind of a different world, and I think the market hasn't factored that in just yet. Will it at some point? I'm sure it will, but for now, this is a kind of a healthy small pullback. Really want to see if the 44.50 area can be broken below.
No, it's a very good point, and I think probably the one question on a lot of people's minds, obviously with Thursday, with the release of the CPI data was, from my understanding, better than what they expected, but yet we saw all this volatility, which of course we always see on CPI days, but the market sold off. So, what's the thought process behind that? Is that just, big money taking profits, or, are people concerned that, you know, things are not going as well as they thought, and we might see more inflation at this point?
Yeah, the inflation numbers, although they were better than expected, the the expectations were a little bit high. And it's higher than what. So think of it this way. It's like if you promise something is going to be bad, but then it's less bad, are you going to be extremely happy about it? And that's what the market had to decide on Thursday, which was why like it puked, post release, and then it went back up, and then it eventually went back down. So it was kind of obviously a very volatile day as they usually are, but the interpretation of the data is, I wouldn't say it's smooth sailing. It's not like, hey, it wasn't like a 2.8% annualized or like a 2.9. It's still up there. It's not as bad at the 3.2 as predicted, but it's still there. Obviously there's still a little bit more work to be done if we want to get to that 2% kind of target that the Feds are aiming for.
Gotcha. So it's basically like they said, we're going to cut off your fingers, but now we're just going to be like, we're only going to do five this time.
Yeah.
So
Yeah.
same concept. That's a good way to think about it. Yeah, it's better than what we thought, but still pretty bad. All right, cool. So that's a good explanation of what's going on in the market and where people are thinking. Let's take a look here at the breakdown in the different sectors that we've been keeping an eye on here. And we can see an overall drawdown in these overperforming, sectors here. We got communications, tech, and consumer discretionary all kind of coming down here. Of course, Apple earnings definitely drug this down quite a bit. But one thing that's really kind of a standout here is energy is really just kind of going nuts right now, whereas the rest of these underperforming, sectors are really kind of flat. Honestly, if we look at financials, real estate, consumer staples, healthcare, utilities, really not making much of a move, but energy is definitely making a run up. Riz, what's the deal with that?
Yeah, we've seen oil prices start coming up. In fact, just a few days ago, the world just saw peak or the highest oil demand, so meaning oil consumption, essentially hit an all-time high. Um, so contrary to what you may be hearing from the renewables and like electric and clean energy side of things, which sure they are important. They are a good way to diversify not only the U.S.'s but the world's energy requirement. It's by no means a sustainable or a viable option to be solely reliant on electric. And I mean by electricity, I mean renewables as a whole. So whether it's solar, wind, all that kind of stuff. So it's by no means at all sustainable to only be reliant on that, because then we're going to have major problems. We have other major problems. So it's good to diversify. So I think the sooner the world realizes, yeah, we can use oil, we can use it sustainably, we can use the traditional energy sources, but we can just be a bit more mindful. We're not only reliant on fossil fuels. We can now use other things. But if we go too far and say, well, we gotta completely get off oil and no matter what, guess what? everyone's going to feel the crunch. Electricity prices are going to go up. It's not sustainable. We're going to see blackouts. This is all the things I don't need to even. It's just common sense at this point. Like one of the largest sources of energy production is still coal. Yeah, it's not a clean energy source, but it's still there because it's still required. The other renewable energy sources simply cannot meet the existing demand. It's not like you can be like, okay, guys, while we transition, no one use electricity for a good 1 year. That's just not happening. So everyone still requires their daily electricity to drive, to whatever, everything, for commerce, for production, for manufacturing, for transportation. All of these things are still using different energy sources. You can't just shut it down uh, and then be like, okay, we're going to hop over to something else. So uh, I'm not surprised energy is making a little bit of a run. We do have some energy exposure by companies, and of course, it's helped when you have oil prices going up. And of course, that's one of the things we want to keep an eye on, because let's say next month's print for inflation, one of the big factors in inflation is gas prices, prices at the pump. So generally speaking, if you have a higher average price per barrel of oil, usually you can assume that prices at the pump are also higher on average, and of course that would impact inflation.
Yeah, and I mean, of course, from what I understand, the current administration here in the United States has been releasing, petroleum from the strategic reserves.
Yep.
Obviously, that can't happen for forever.
Yeah. Yeah, they did it to kind of put pressure on oil prices, and now that it's the SPR, the petroleum reserve is pretty much near the lows. It's not empty, but like it's really near the lows, and it's sort of a safety net. The safety net's been used up, and now it that's it. This is it. Like they can't put any more downward pressure on prices, and not much more. So they've used that kind of think of it like a uh, you
Ace in
know,
the hole.
yeah, ace in the hole. They've already used it. They've used it. And at some point, in fact, they're gonna have to refill the SPR. They're gonna have to refill the reserve. So they're gonna have to buy back. They're gonna have to buy oil. Now their goal was to buy it back below 60, 65, 60, depending on who you listen to. That price per barrel. That did not happen. And lo and behold, they waited and they waited, because if they kept buying, if they went on a little buying spree, it would impact the supply. And of course, we know supply and demand, it would probably push prices up anyways. So they held off, and prices have gone up anyway. So it's kind of like they missed the opportunity to refill the SPR, plus prices went up anyway. So it's kind of like a double whammy. Um, and here's a situation that we're in. I'm not saying energy prices being at the levels that they are is a good thing, but I am not. It's not unrealistic to expect them to be at these levels when you can't keep putting downward pressure on the oil prices anymore. We also know, obviously, for the last few months, the OPEC oil production cuts have come into play, plus they've been extended. So it's kind of like a perfect storm for oil companies, or oil producers, oil exposed energy companies.
Yeah, let's talk about that price of oil, shall we? As we talked about last week, oil has been going up here since about the end of June. We've seen a very steady increase in that. We are coming dangerously close to that 85 resistance area that has been, somewhat of a decent indicator of support and resistance here in the past. We did have this nice little rejection here on Wednesday, it looks like. Yeah, we were there. Let's see, right around 84.40 a barrel, and we kind of came back down going into Thursday and Friday being a little flat. So oil definitely on the rise here, and Riz kind of outlined all of the reasons for that in our last slide. And then gold really just kind of came back up here to 1967 and rejected off of that really pretty hard, and we're right back down here, in this trough where we were before, right around 1910. That area has held pretty solid in the past. And it's interesting if you listen to people across the internet who are, we like making fun of these folks here. But they'll say that the price of oil is skyrocketing, but then they don't actually look at the price of oil. And I would say this is a fairly gentle rise. I wouldn't call that a skyrocket. I think this is more of what I would call a skyrocket, if you're asking me, or as Riz likes to call them, a face-ripping rally. This is kind of fairly gentle.
Yeah, honestly, I'm glad you mentioned that. That's great. I couldn't agree more. Like, it's good, like that you put that in context. Like, you have that beautiful channel there. It's still within that channel. Yeah, it's an increase. Like as a percentage from 70 to 84, whatever. Like it's a sizable uptick, right, over the last couple of months. But is it like, oh, like, oh my God, like $200 per barrel is what people were saying? I remember there was a few people.
Oh yeah.
I just this brings us back to the kind of world we live in again, which is another topic for another webinar, I guess, where
Yeah, that's fair.
everything is completely clickbait, overblown times 100 and everything. It could be energy prices, it could be socioeconomics, it could be what's happening in a country, it could be for a war, it could be about a health related thing, it could be everything, and this everything is just on roids, so to speak. Like it's ridiculous. And this is the world we live in, where clicks, views, all that is highly monetizable and highly lucrative for the people that are on the receiving end of those views and clicks. So this is not new. We've known this for a while. This has been going on for years now, and I don't think that's going to change. But all we can do is, like you said, quantify it in a realistic light. And as you said, it's the data is there. It's a rally. It's a 25% move in a couple months, not in a couple days. And oil is still back at April area level. It's not back to 22 levels. So everything has to be viewed from an important lens of yeah, look, you can zoom in, but it's more also zoom out and understand where we are in the larger scheme of things.
All I'm going to say is if you subscribe to anybody and they tell you that the price of oil or gold is skyrocketing, come watch our webinar first and kind of just silently fact check them. You don't have to say, hey, Riz and Chris said this. But I mean, if you want to, you can. They're probably going to look at you and be like, who in the world are Riz and Chris? But just, always do that mental check here, because we're going to give you the real data. We're not going to sugarcoat it. We're not going to tell you that gold's going to the moon when actually it's been selling off for the last, let's see, month and a half or a month total. So, just check things is all I'm going to say, because a lot of people like Riz just said now really will sensationalize things.
And both sides. And I know everyone keeps thinking like this person and this, and I know it usually comes down to politics, but I feel like even from narratives in finance, even in narratives around economics, there's like everything is so polarized. It's like always everything is like a diehard
one or the other.
Yeah, one or the other. And you and Chris, you know this, and I'm sure current elite members on here also know this. But for those that are watching outside of our regular webinar live schedule, if you're if you just kind of curious, you should know that we don't do that, and we never have, and we never will. It completely goes against my ethos. I'm not a proud person, but I hold myself accountable to being as unbiased as possible. And because this is important, this is stuff that we don't want to screw around with and give the wrong information to people, because it can impact them significantly. And I've seen it. So many people get sensationalized about a specific stock or a specific company, or even like whether it's crypto, like that makes a big impact to their finances. I've seen it because I talk to people all the time who have had good experiences and bad experiences, but the bad experiences usually happen when they become a diehard or sensationalized, whether it's like Dogecoin or like, it's wild. It's wild, right? Or it could be like one of the meme stocks like AMC. Like there's people that have still held that for last few years. It's like GameStop. I can go on, and I can apply this logic to everything in life, whether it's a style of working out, whether it's a style of or a diet, whether it's politics, whether it's economics, or even if it's like a trading style, like everything. It's so absurd, but this is where we are. And I think the only thing we can do is be aware. Be aware. Awareness is important, and I think once we're aware of what's going on around us, plus we're self-aware enough, we can react accordingly. We can, choose to put our energy into certain things and fact check and double check and compare and correlate. But other than that, we don't need to freak out and fall for these traps that is far too prevalent nowadays.
It really is. I have a good friend of mine who's still in AMC, and I have talked to him, tried to get him into Elite, and he just won't do it. And I'm thinking to myself, dude, I could have saved you thousands of dollars. But
Yeah, it
yeah,
happens. It breaks my heart because I see it all the time. You cannot
yep.
help people that don't want to help themselves. It doesn't matter. Like, you could be like, dude, I will literally pay you. And if it goes against their beliefs, doesn't matter. You could I've seen it so many times. People lose. I mean, people message me when I can't specifically tell you who, but this because like this obviously all online. And but I have someone who's like, Riz, I'm down 50K and they borrowed the money. And I'm like, you borrowed the money. How'd you borrow the money? They borrowed on credit card debt. And then they lost the money in the market. I'm like, what did you trade? They're like, they traded options. I'm like, fuck's sake.
Oh boy.
Like, you don't know what you're doing. How did you learn? So you don't know what you're doing. Then you borrowed money. Then you use money you can't afford to lose. Then you did options, and you did it by taking it on the highest credit interest rate possible, which is credit cards. What,
Yep.
25, maybe something like that percent
Mhm.
annualized. That person's done. They're like, Riz, what do you think I should do? And I'm just sitting there like, I
Get
can't
another
tell the
job.
person. I hope, yeah, yeah. And also they don't have a job. They can't get
Oh,
a
okay.
job.
Well,
So
getting number one would be a good start.
yeah, I imagine my face, Chris. Like,
I can imagine.
what do you say to this? And like, I don't want to call this person out. Hopefully, they're not watching this webinar. It's just gonna be so fucking awkward.
Okay,
But
hang on a second, guys. Okay, so we're back. This is Riz's face when someone tells him what he just talked about.
fuck, I almost spit my tea out. Okay. Sorry, guys. We're having a little bit of fun. I think this is the best way to do these webinars, having fun.
For
Um,
sure.
Thank you for that, Chris. I think you nailed it. Honestly, you nailed it. I was wondering where you were going with it, and then that was funny. I was not expecting that.
Thought you'd appreciate that. I hope everybody liked that.
Yeah, it was fantastic. Keep that in, or I don't know,
I
however you
will.
want.
I'll edit it
Yeah,
appropriately.
yeah. I am seeing more of this because I'm also trying to be a little bit more open to understanding where people are. And again, this is a little bit of a segue, so I apologize. But like, I'm trying to be a little bit more cognizant, cognizant of where people are in their personal finances because I've realized maybe a little bit late that trading and investing is amazing. I think everyone should do it, in my opinion. But it may not be. It's one of those things you don't do first. You have to have the groundwork. Like, for example, if someone doesn't have a job, no, they shouldn't be trading, and no, they shouldn't be taking money out of their fucking credit card. Like, fuck, like, and no, they shouldn't be trading options, no matter what the fuck they say online. Like, some guy making 500 to like 50,000, which is most likely bullshit, but still, like, this is how they fall for it. Like, it just blows my mind. I'm like, imagine, and I don't want to pitch the guy like after this, but I'm like, in my head, I'm like, fuck, if this guy would have reached out to me before he did this, I would have plainly told him, bad idea. Don't take
Mhm.
the money. You don't have a job. Okay, first on focus on getting the job. Once you get the job, once you have an income, then come back to me. Let's get you trained up. Let's get you learning how to actually trade and doing it the right way. And then you start small. You start small with the money you saved. So the personal finance part is so important. And I think I want to focus more on that. Not only obviously like if in elite or something, but I mean as a whole, as part of Riz International, I want to focus a little bit more on that. I think that area is something that again, it's on me. I've neglected addressing that a bit more because I always assumed that people knew how to take care of their personal finance, and I was obviously wrong. And over the years, as I get to see this, and I'm like, oh my God, this is a problem. Like, this is a widespread problem, and I think it's only gotten worse because obviously look at what's happened right in the last year and a half, where everything over the last 10, 15 years, you know, ding, 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 credit card rates, mortgage rates,
Yep.
loans, financing, credit limits, everything is turned upside down. So people are like, holy shit, they haven't learned, dude, they don't know what anything above 2 to 3% interest rates are.
Hmm.
And I get that because it's not their fault. We haven't gone through it. Like the last time rates were at these levels, I was like a kid. I didn't even know what I was doing. It was early 2000s. Like, like I was in elementary school. Like it's so if I know how to navigate this, but a large constituent of population doesn't because they've never seen rates like this. And that's why we're seeing, and I get more and more and more of this kind of situation where people are either underwater, they're now like, holy crap, what they could get away with, they can no longer get away with now.
Yeah, it's very true. It's a different market that we live in. Let's keep moving on here. Let's take a look at some financial indicators here. And, it's pretty much more the same. We're seeing here with the bond yields, the 2-year bond yields are still outperforming or giving you better yields than the 10 and the 30, the 10 being the purple, currently at the lowest, and the 30 being the teal colored line right here. So we are seeing that yield curve inverse. So we're definitely having that. We have for quite some time, but it's still here. It's something that we're keeping an eye on. Dollar has been recovering very nicely over the last couple weeks since this dip here in July. Again, people saying that the dollar is failing, gold to the moon, stuff like that. I would encourage you to show them this chart and please tell me how the dollar is failing because it sure seems like it's okay and healthy to me. So yeah, I mean, not trying to rant on other creators or things like that, but just make sure you check your information. That's all I'm going to say. And if you want real information, well, you can always come here because we're going to give it to you.
Yeah, thanks for again hitting the nail on the head there. This is good. With the U.S. dollar increasing a little bit, and of course, bond yields holding steady, a little bit of an uptick, right, from last week.
Yeah, a
Uh,
little bit.
yeah, so not surprising. I'm sure again people would be polarizing that too, like, oh, bonds are crashing, and obviously bonds are down, hence why yields are up. But nothing is as black and white as sometimes we may want to fall into that trap. It's not always like that. And yeah, everything I think is not much to be gleaned from. Like we can't. There's nothing I'm looking at here that I'm saying like, okay, well, this is the play, this is the trade, this is what's setting up. I think
Yeah.
things are continuing. We're now in well into Q3, and it's interesting because we're now going to be in the second half of August almost, which is absurd. But it's going to be interesting when it's half the month done.
Dude, where does the time go? I don't know. And I'll tell you, I have a 5-month-old, and the days seem pretty long to me, but the months and the years go quick.
Oh my God,
Let Yeah, it's
5 months
yeah, she's 5 months
already.
already. It's crazy. All
Wow.
right, let's take a quick look here at the important dates in the market this week, and not too much going on. The FOMC minutes here on Wednesday in the afternoon after lunch could be interesting. Retail sales should be interesting to get an idea here for the month on month for July. It looks like they're expecting a bit of an increase. So that could be good. Consumers spending more on retail during the summer. Christmas in July, as they like to say. Building permits, it's interesting to see how the construction is going, new constructions. But as far as huge market catalysts are concerned, I wouldn't think that these are too impactful. Not like the CPI data that we had last week.
Yeah, correct. Yeah, absolutely. A little bit of a slower week. There's still going to be things happening, I'm sure. I'm sure there's probably going to be some Fed speakers talking about this or that and just, yapping away as usual. But yeah, I agree. I wouldn't chalk up these to being major things. So ultimately, it's really going to come down to broader price action, market structure. If there's any kind of unforeseen events or like catalysts that come up, maybe one of the Fed, members says something in some interview that really shouldn't matter, but hey, who knows, right? There might be some sound bites that the market might react on. But overall, I think right now, just based on that, I think it's really going to come down to price action, technicals, keeping a close eye. I still remain about 90% or so cash, roughly, not an exact, and then the trading account specifically. So it's I welcome a pullback. Obviously, this pullback has gone my way, it's good for me. I know it may not be the case depending on, who you are and if you're watching this, depending on how you're aligned and your exposure to the markets. But again, I say this from a personal standpoint. For me, I welcome a pullback. And we are getting a little bit, this is a little bit, but it's not enough for me to be like, all right, guys, let's, you know,
Risk
go in.
off, baby.
Yeah, I'm not in that situation yet.
And guys, let me just touch on something here before we get to this week's earnings. This is what you should be coming here for, because this is advice that no one else is going to give you, saying, okay, now it's time to wait and hold because the market's selling off. Most people are like, oh, I'm losing money because the market's selling off. Well, that's because you didn't sell, when the market was up and you held too long. You're sitting there hodling, hoping that it just keeps on running. But this is where the money is made. When the market pulls back, it's the whole axiom that we live by: buy low, sell high. Well, guess what? If the market just constantly goes up, there is no buying low. You just buy and let it go up. We have to have these pullbacks. They're natural, they're a good thing, and this is where big money is making their money, and it's where you want to make your money. So start thinking like somebody who's a millionaire and be like, okay, this pullback is a good thing. This is exactly what we want. Now, if you're holding a position, it's your decision whether you want to let that go to be able to deploy more capital, or whether you want to hold on to it and wait for the market to come back up. But if you've been in cash, more so in cash, like Riz has been talking about, you should be in a good position when the market does decide to curl back towards the upside.
Yeah, beautifully said.
All right, cool. Let's take a look at those earnings for this week, because we have a few, but no huge names, not like we did. There are no Apples, but definitely some big names coming up this week. And mostly what I'm seeing is in the retail sector. We've got Home Depot on Tuesday, should be big. Target will be interesting. Cisco, of course, in tech, that will be an interesting one. Walmart on Thursday before the open is probably the biggest one that I'm seeing this week. And, if you like farm equipment, John Deere's reporting before the open on Friday. But I'd say Walmart is pretty much the name that I'm keeping an eye on, and Target are going to be my two big ones this year. Riz, is there anything that I'm missing here?
No, you got it right. For me, I would say, yeah, it's similar. So for me, Suncor is one. Suncor is a
Yeah.
Canadian oil company. So that one is important. Gonna give us a little bit of an idea how uh oil prices that have been up in the last couple months have impacted them. Home Depot obviously also gives us a look into how the consumer is spending in regards to um, regards to their housing. Like, are they renovating more? Are they getting more supplies? Obviously, when the consumer is in a pinch, they need to tighten up the purse strings. They are not going to be going out and spending a bunch of money on lumber and fixtures and getting their house remodeled or redone, right? It's not as common. So it will be interesting to see that. Of course, like you said, Target's another one. Target's big, to see kind of idea of where they are from a retail standpoint, retail sales. And then of course you have TJX as well, another retailer. I don't really care too much about that, but Cisco is also a, telecom tech type of stuff. But Walmart is, I would say, the biggest, most important one for me personally, as for you, Chris. And last but not least, I would say AMAT, which is Applied Materials. This is a semiconductor, type of tech area. So that will be unique to kind of see how that does. It's a little bit after, what all the other stuff has already, we've already had the NVIDIAs and the AMDs and all that. So it'll be interesting to see how it does.
Yeah, so those are going to be our big earnings, and that is what Riz is watching. If you're here on the live webinar, go ahead and start posting your questions for Riz. I should have had you do that earlier. I apologize for not being on the ball there. I was too excited when we were talking about pullbacks and stuff like that. So I don't know how that person unmuted there, but I will just take care of that. So yeah, just go ahead and type in your questions if you have them for Riz or myself, but we all know you're here for Riz. I'm just the MC here to make Riz look good. I'm not sure how I'm doing with that picture that I posted, but I think you all enjoyed it. Can we check a long play on Tala? Okay, that's not one that I'm too familiar with.
What the fuck is that?
Yeah, Tesla. Okay. Okay. Lovely typo there, brother.
Yeah.
Okay, so Tesla, pulling back here. If I recall, didn't they say that they were having less orders, or am I imagining that? I thought that that was part of the earnings report that that orders were down, but someone can correct me in the chat if I'm wrong about that. But yeah, I mean, Tesla pulling back here fairly nicely. Looks like it bounced right here around 240. That seems to definitely be a very important technical area. We did bounce here back in June. Looks like we, with this doji candle here, we definitely had a very nice technical bounce. But yeah, I mean, if you want to be risky, I mean, we're kind of in no man's land here, in my opinion. If 240 doesn't hold, we've got a lot of downside. I would say we've got a decent inflection point. Well, even right there at 238, definitely bounced nice there. But yeah, if we continue to go down, we've almost basically gap filled back down to here around 235, and then major bounce point here at the 100. 218. So, but it could go either direction. I mean, it does look like it kind of wants to start curling up, but I would want a little more confirmation before I jumped in. Riz, what are your thoughts?
Yeah, I'm not, my stance, generally speaking, on Tesla as a company, even as a stock. I predominantly lean bearish. Again, that's just me. So I feel like right now, like you said, very much in a little bit of a no man's land, key pivot point here, key sort of support, if you want to call it. And if it does go lower, I think there's more downside to down 220. So not something I'm looking to go long. I'm more so waiting to see if it's an opportunity more on a short side. If we see market pull back further, again, that's an if. I think this will obviously, is a higher beta, this will drop more. But I don't personally see a long yet. If you do see a long position, again, not knocking it. I feel like, if someone does want to take a starter, I can understand it, but you're gonna have to have a hard stop on this, because once it let goes, it just lets go, and it's just like a big, meltdown. So we've seen that once it goes up, it rallies, it just runs like a freight train, and then once it gives back some of the gains or pulls back, it does so pretty hard as well. So something to be it's something to keep an eye on. So personally, not going long, but let's see. If you decide to take a starter, have a hard stop.
I can see your thesis though, Panos. I kind of see what you're looking at here. And it definitely, from a technical standpoint, it has the potential, but there is a lot of potential downside too. So it's a risky play. So yeah, I like Riz's idea for a hard stop on this, because when Tesla runs, it freaking runs. That thing can get some legs. All right, Jeff has a question, and Nikhil, can you post a ticker for that that stock you want us to look at here? We'll get to that in a second. All right, so Jeff says, are we seeing some sector rotation with the drop in the Qs as well as the S&P and the uptick in XLE?
So this is a good question, interesting one. Yeah, Chris, that's good. Can you also bring up QQQ? Or the NASDAQ, whichever. QQQ is fine. Yeah. So what I want to, Jeff and everyone else, what I want to point out to you is I would not classify this as a sector, like a rotation into different assets or sectors. This is purely just energy running up, right? This isn't a sector rotation. I don't see anything that's telling me this is a sector rotation. We've seen both NASDAQ plus the S&P 500 and pretty much all the other sectors come down or stay flat. The only thing going up is oil. That doesn't mean money is leaving the other sectors and going to oil. It just means oil is going up. Okay. So not enough of an indication to call it sector rotation just yet. But that's a good question. Good, like a good way of thinking about it. That's good. But just not this time around for this specific example.
All right, cool. All right, Nikhil wants us to know if we would support him on a short on Next Era Energy, and I had to ask him for the ticker on this in a few weeks. Let's take a look at this.
Yeah.
Okay. Again, this is an energy stock, I'm presuming.
Yeah, utilities. This is what I would classify it as.
Looks like we missed the move, if you ask me. I feel like if we short down here, you're chasing it.
Yeah.
If we get a bounce back and a rejection, maybe, but definitely not shorting down here.
Yeah, I would not short. I would not short down here. It's had multiple touch points to the 68 above 68's holding. Uh, and Chris has that line there, but even look at the last week. Look how it's consolidating right at 68. I would not want to be short this if it has like another green candle, just like it did on Friday. So be very careful in a short. Like look at this. Like look at the bigger picture. We don't have to go that far back, but yeah, like Chris is outlining too. Look at how it's a bit of an important level, and you can see
Hmm.
in the stock how once it finds a floor, it rockets. Take a look at this. Like zoom in, Chris. To yeah, right there. Like look at March finds a floor, right, and then boom. Look at March again. Boom. Look at October, November. So you don't want to be short this thing once if we do see a rotation, as Jeff mentioned, sector rotation. Well, to kind of follow up on Jeff's question again, if we see sector rotation into utilities like this, and you see, massive dip buying on this, yeah, you don't want to be short this. It runs big.
Yeah, I think if we continue to consolidate down here, that's a really bad sign, in my opinion. And yeah, we do seem to really like a floor and then just rocket off of that. So yeah, that's a next level dangerous short is what that is. All right. Also wants to take a look at CHTR as a potential long play. Charter Communications. This is one I'm not familiar with. We missed the move on this one. But man, earnings were not too hot, but yet this thing keeps going. Well, I guess it wasn't too bad of a miss, only about a 0.14% miss. So
Yeah, a little
not
bit of
ter
yeah,
yeah,
a
so
little
not
bit,
terrible.
but overdone. Look at the rally.
Yeah, that's what I'm saying. It's already overbought.
Yeah, overbought. It can still run because obviously if we go back the last couple of years, you can see obviously it's been beaten down.
Hmm.
Definitely the smaller communications, like telecoms, type like that, if I'm not mistaken. So I feel like personally not my type of stock. I don't usually trade um telecom. Like you won't see me really trading like AT&T or like Verizon. Like I really don't trade those, elite members and students know this. But if you are kind of looking into this, I would wait. I would wait to see if it kind of pulls back a bit. Most likely it was probably severely and significantly like sold off, like undervalued. Like you could see that. It's pretty much stayed below that 416 level for a really long time, for many, many, many months. So it's had a little bit of a resurgence since June, but I would personally, you could classify this from a pure technical standpoint as a breakout. So if you do go long, I get it. From a technical standpoint as a breakout continuation, then you'd want to have your stop at around 416 area, right? If it goes below that, then you're just out. So you can go long from a continuation trade, breakout, pure Momo momentum trade. It is overbought, but it can stay overbought as we know. So if it continues to run, great. You just keep moving your stop up. But if it curls over after you get in, maybe 416 area again, and not being precise there with that, but around there, if you have a stop, you get out. It's a decent risk reward if you want to. But again, not personally my kind of stock to trade.
Yeah, I would say, if this 416 area is, incredibly important for it, which it does seem to have some statistical significance that there is some support and resistance there. If it kind of comes back down there and holds and consolidates a bit more, that might be a better time to go long. But yeah, I mean, you're not giving up too much by taking a starter position here. But yeah, hard stop on this for sure. All right, Jeff coming in wants us to take a look at Apple. Thinks it may have found a floor. He's looking at a long dip buy play on it. Can't type now. Okay. So yeah, we definitely dipped here on earnings. Of course, we discussed that last week. If you missed last week's webinar, make sure you do check that out. It will be linked in at the end of the video in your suggested video. So make sure you check that out. But yeah, we definitely had a bit of a bleed off here post earnings on Apple. Currently looking at oversold, which we haven't seen things oversold in a long time, at least in the tickers we've been looking at lately. And we do kind of seem to have found some support here around the 100 moving average. Let's see. Yeah, I mean, like right around here in this 177, 178 area seems to be somewhat important for it, at least for the short term. And I mean, Apple definitely a solid company, not going anywhere. I don't hate it long here, Riz, what do you think?
Yeah, I actually been watching this closely. I obviously it's a great company, great stock, but it's had a tremendous run. Literally just been on a massive 7 month run, leading up to earnings, and earnings just kind of just broke it a bit. But other than that, it just continues to just chug along. And when it something like that happens, even after we've seen this kind of pullback of what is it from the peak, what is it? How much is this percentage wise? 196 or so. Let's say 196 to now. 10%. Honestly, it's a 10% pullback when it's had a massive run from like 124 or 125. Like that's yeah, it's a decent amount. It's a decent pullback. Uh, but I think this is only thing I would do with this one is maybe take a starter. I would not take anything more than a starter. Personally, we know it could recover if markets do well, or this recovers, market will do well. If market starts recovering a bit, this will do well. So it's very deterministic on how the overall market is. I was quite surprised to see this gap down and then actually go a little bit lower. So that's what gave me a little bit pause of actually even doing a starter position. Obviously, Friday was a little bit more, good in terms of holding that 100-day moving average and that kind of 176, 177 area. So this is definitely on watch for me. But if you feel like you're okay with the risk reward on this, taking a starter, yeah, I not yet for me, but I can get it.
Yeah, I can get behind the starter position too. Always have space to average down, and could definitely be a good play for you. Either way, even if it does go lower, having that ability to take a little bit more, drop your average a bit, great option. Or if it just starts to go back up, well, then you're in, and you're sitting pretty at that point. Really great questions tonight. Thank you, everybody, for coming out to our live session. Riz, do you have any closing thoughts you'd like to share with us?
Closing thoughts is everyone should watch our webinars. Everyone should get on it more. Everyone
100%.
should engage with this content on YouTube and on social media. Like, guys, come on now. We put our heart and soul into this. I've obviously genuinely love and appreciate your support throughout this time, all this time, appreciate it. But if I can just ask for a little bit more, just engage with our content, whether it's on social media like Instagram or whether it's on YouTube. Those are our main kind of things. Instagram obviously being the biggest one. It helps a lot. We have a tremendous community. We have a tremendous amount of you know, quality, long time, literally family members is what I think of it when it comes to Riz International and Elite and to students. Well, we should, definitely rally around. And if we can help others, if we can support each other, I think that's the ultimate goal. And I think as we continue to do what we do, we also want to consider perhaps, think of it from a personal finance standpoint. If we can help other people find the content, it's not just about trading. It's not just about investing. It's about the trajectory of people's lives. It's about, I don't want to use the word financial freedom and throw it around because it's a very, like it's like a buzzword that's thrown around too much, but I want to say that we can impact people positively together. And that's what I hope everyone can do. We can speak to people we know, speak to our friends. I know Chris mentioned his friend who I don't know what kind of friend that is, Chris, but I don't know what kind of friend
one
that
who
is.
makes one
I
who
mean,
makes questionable choices in the market. We'll put it
yeah,
that
I
way.
mean, that's your lookout, but man, I would be having a stern talking to with him. But no, but in all seriousness, I think the people that we know, the people that we interact with, like bring them into the fold and help them and guide them. Because if you've been here long enough, you're either watching the webinars, you're an elite, you're a student, you're a follower, you hopefully have a little bit of an idea as to my intention, my style, my approach to not just markets, but to money, to life. And you have to ask yourself, do you align with that? Is that something you want? You will notice I'm not about this, all the fancy stuff or like the in your face kind of like, you know, I'm not into like that craziness. Like I'm not into the catchy clickbaity stuff. I'm not into um the kind of things that we see nowadays, which is pretty much the norm. So you have to ask yourself, is this something you resonate with? Is this something you appreciate? And if you do, I would love to have your support. I would love to have, you let other people know about us, people that you know and love, that care about. So that way, I don't want Riz International to only be for people that only want to trade and invest, because trading and investing is a crucial part of growing our wealth and living the life that we want to on our own terms. But it's not the only thing, right? And I kind of tuned to that earlier, that we have to have the groundwork there. So I feel like as we kind of, I don't want to say transition, but as we continue to do what we're doing, but also add this factor of being aware of what you're doing with your money. How are you approaching money? What's your mindset around money, around spending, right? Like obviously you got to live life, you got to spend money, but how are you doing it? What are you making? How are you diversifying? How are you investing? Right? These are all things that go part and parcel with really your bigger financial picture. And trading and investing is one piece of that puzzle. It's not the only thing. So I don't want people to think like, oh, well, I have these friends, I have these people, they don't trade, they don't care about trading, they don't want to, they don't care. Okay, that's fine, but there's more that we do than just that.
Absolutely. Couldn't have said it better myself. So, in the spirit of engagement, if you're watching this and you made it this far, which you should be in the first place because all the good stuff in webinar happens at the end, tell me what you would do here on Apple. Are you taking a starter position here or are you going to wait? I want to know down in the comments. And if you leave a good comment, maybe I'll feature it in our next video. So, guys, with that, of course, have a great rest of your weekend. Don't do anything I wouldn't do, which gives you a lot of leeway. And we'll see you in the market on Monday.